Market turmoil, how Trump's tariffs and rising unemployment are shaking global economies. Imagine waking up to the news that the global economy is spiraling into a vortex of uncertainty. That's the reality we're facing today, as trade tensions escalate and unemployment rates climb. On what should have been a celebratory day, dubbed Liberation Day in April, markets took a nosedive in response to US President Donald Trump's latest round of tariffs. These new levies, targets and delays https://www.bloomberg.com/news-articles/2025/US announces reciprocal tariff rates on trading partners. SREF, FSOFS, were not just a surprise but a shock to the global economy, as reported by Bloomberg. But here's where it gets controversial. Trump's trade threats are not the only culprits behind the market's downward spiral. The end of this self-imposed 90-day delay on reciprocal tariffs coincided with a stark revelation from the Bureau of Labor Statistics, BLS. The employment numbers released on Friday painted a grim picture, suggesting that the record-breaking US employment of recent years is in jeopardy. And this is the part most people miss. While the slowing economy and the GDP data showing growth might seem contradictory, they actually paint a more complex picture of an economy on the brink. The question remains, how long can the US economy sustain itself amidst these turbulent times? As we delve deeper into this economic quagmire, we invite you to share your thoughts. Do you think Trump's trade policies are the primary cause of the market turmoil? Or is there more to the story? Let's discuss in the comments. Trump's tariff takedown. Markets plummet, Labour chief fired amid jobs data row. In a dramatic turn of events, global markets took a nosedive following President Donald Trump's announcement of sweeping tariffs and the release of underwhelming jobs data. But here's where it gets controversial. Trump fired Dr. Erica McIntyre, the commissioner of the Bureau of Labor Statistics, accusing her of manipulating job reports for political gain, without providing evidence. This move has sparked intense debate and concern. The market turmoil. US stocks faced a sharp sell-off as Wall Street grappled with Trump's new trade policy, which imposes tariffs on nearly every nation, marking a significant shift from decades of free trade. This protectionist stance, effective August 7th, has rattled investors and economists alike. The jobs report fallout. The July jobs report revealed a mere 73,000 jobs added, falling far below expectations. Adding to the turmoil, May and June figures were revised downward by a combined 258,000 jobs. Trump's response: he fired McIntyre, claiming political bias, despite the Bureau's non-partisan reputation. Fed reshuffle. In another unexpected development, Federal Reserve Governor Adriana Kugler resigned months before her term ended, allowing Trump to appoint a replacement sooner. This could further tilt the Fed's balance in favor of Trump's economic vision. The broader implications. Trump's actions have raised alarms about the integrity of US economic data. The National Association for Business Economics condemns the firing, warning it threatens the credibility of the nation's statistical system. Critics argue this undermines the reliability of data businesses and policymakers depend on. Controversy and counterpoints. While Trump insists on the need for trustworthy data, his critics see this as a dangerous precedent. Former BLS commissioners and economists argue it's nearly impossible to manipulate job numbers without detection. They call for congressional investigation, emphasizing the importance of non-partisan data. Global economic ripple effects. Trump's tariffs, set to raise the US effective tariff rate to 17%, are the highest since 1933. This echoes the Smoot-Hawley era, which exacerbated the Great Depression. Economists warn these tariffs could reignite inflation and stifle global economic growth. What's next? As Deputy Commissioner William Wachowski steps in as acting BLS chief, questions linger about the future of economic data integrity. Trump's actions have not only shaken markets, but also ignited a debate about the role of politics in economic institutions. Thought-provoking questions. Is Trump's firing of McEnteffer a justified move to ensure data integrity, or a politically motivated attack on a non-partisan institution? How will these tariffs and leadership changes impact the US economy and global trade in the long term? What does this mean for the independence of federal agencies and the credibility of US economic data? Join the discussion. Share your thoughts in the comments below. Dow plunges 500 points. Weak jobs report, Trump tariffs shake markets. Live analysis. Stock markets just took a nosedive. And the catalyst isn't a secret. Let's unpack the perfect storm that sent the Dow tumbling 500 points, and why this isn't just another market dip. President Trump is making headlines for demanding the removal of a key official overseeing labor statistics after a lackluster July jobs report. The president publicly questioned the validity of employment data, claiming without evidence that numbers were being manipulated politically. This political firestorm collided with revised tariff policies, creating a double whammy that left investors scrambling. The jobs report showed the economy added only 106,000 jobs over the past 3 months, a significant slowdown from previous months. While the unemployment rate held steady at 4.2%, the modest hiring pace raised red flags about overall economic health. Meanwhile, new tariffs introduced by the administration targeted key trading partners. Switzerland now faces a 39% tax on certain goods, up dramatically from April's proposed 31%, while Taiwan will see 20% levies. Canada faces a 35% tariff hike on non-compliant goods under new trade rules, though Prime Minister Carney's muted response suggests hesitation in retaliating. This shift in trade policy is sparking debate. Why are countries with trade surpluses, like Switzerland, being hit harder with 15% tariffs compared to deficit-ridden nations getting 10%? The answer could lie in economic leverage, as the US extends olive branches, like Mexico's 90-day tariff reprieve, to maintain negotiating power. Corporate America isn't immune. Amazon shares plunged 8.3% after cloud computing growth missed expectations, while other companies openly warn that tariff uncertainty is chilling business planning. As markets closed, the tech-driven Nasdaq suffered its heaviest loss, dropping 2.2%, while the SP 500 shed 1.6%. The Dow's fall capped its worst weekly performance since the April Liberation Day tariffs shook markets. Global markets reacted sharply. European indexes fell over 2.5%. South Korea's Kospi slid 3.9% amid tax changes. And the US dollar weakened. Bond markets saw 10-year Treasury yields dip to 4.218%, reflecting risk-off sentiment. But here's the big question. Should presidents have direct influence over economic data reports? Trump's demand to replace the BLS chief raises heated questions about data integrity versus political interference. And another controversy brews. Can sustained tariffs without trade deals really spark economic revival? What's your take? Do you think Trump's approach to trade negotiations is effective? Or is it creating more market instability? Share your perspective in the comments. Catch up on our WSJ Minute Briefing audio recap for a concise market summary. Link placeholder. Stay ahead with our free weekday market newsletters. Link placeholder.